Hey everyone, this is Chris. Welcome back to the channel. So Meta reported today, and a couple other companies did as well, of course. It's earnings reports season. Let's take a look together. So let's type in Meta here. I saw the stock was down, 13%. I saw the stock was down, and I wanted to share with you guys some of the news here from this. See here, where's Meta? So at 327, I can see the stock started to go down. It says Meta shares are lower ahead of Q3 earnings, so people are already kind of down on the stock today. And then when they came out with earnings at 4:06 p.m., which is a little bit ago, a few minutes ago, as of recording this, it's saying Class A common stock Meta reported quarterly earnings of $1.64 per share, which missed the analyst consensus estimate of $1.91. So they missed what Wall Street expected by 14% in terms of their earnings. That's a pretty sizable miss. This is 49.07% decrease over earnings of $3.22 per share from the same period last year. 49% decrease. Oh, so they missed Wall Street estimates by 14% in terms of how much money they make. And their earnings, right, the bottom line went down 49% from last year. There's no positive way to paint that. Yeah. So theoretically, if you just base stock based on earnings, it should just go down 50% from last year's prices. Which actually, you know what? Let's do this. Let's just check. So it should be down 50% from last year's prices. And we are currently down 61% year to date. Yeah, so the stock fell accordingly to, kind of where you would expect it, essentially, because you're down 49%, and then also too you're kind of concerned about the future of the company. I mean, I don't think that's a crazy thing to say. Boy, that's nuts. It's down like 60% last year, huh? The company reported quarterly sales of $27.71 billion, which beat the analyst estimate consensus of $27.53. Yeah, but you're beating analyst consensus by 0.67%. This is a 4.47% decrease over sales. So again, guys, with inflation, your sales may increase. So wait. This is a 4.44%. Oh, okay. Oh, it's a decrease. Crap. Their sales decreased by 4%. Oh, I see. So their revenue beat the estimate of what Wall Street thought they were going to do. So Wall Street thought they were going to come in lower, but boy, so their top line's going down, their bottom line's going down, and I'm sure their expenses are going up. Daily active users are up. There's not really much to say positive here. Ad impressions across our family of apps increased. Okay, so their ad impressions are up 17%, but their average price per ad is down 18%. So it's a wash. But this shows you here, guys, though, that people are not as willing to pay for advertising. So hence the competition is down to pay for advertising. So 18% is down in what they can charge for ads. So ad revenue is and I've been talking about this to you guys before, is Google, Facebook, we knew this already, like Snapchat, social media companies, they depend on people advertising on their platforms. Also too, what they do is they take your data, and it's free for us regular people, but free. They take your data, and then they you sell it to advertisers and say, hey, this is the stuff that people look at, this is how old they are, how much money they make, all these kind of things. And then they sell that to advertisers, and advertisers advertise. That's how their business model works. So it's down 18% in terms of how much they can charge people. And then here's a quote from Meta. We are holding some teams flat in headcount, shrinking others, and investing headcount growth only in our higher priorities. As a result, we expect headcount at the end of 2023 will be approximately in line with the third quarter of 2022. So I don't think they're going to fire a huge amount, but doesn't look so good, guys. Let me see if there's any other details that's worth mentioning. Actually, there was this one thing. Yeah, we'll do this. So let me read this to you guys. This is from the CFO, the Chief Financial Officer over at Meta. And let's just see what they have to say. We expect, and actually, you know what we'll do? We'll do this. So you know what? I can just slide this over here. We'll just do that. There we go. How about that? Okay. All right. CFO outlook and commentary. We expect fourth quarter 2022 revenue to be in the range of 30 to 32.5 billion. Our guidance assumes foreign currency will be approximately 7% headwind year over year total revenue growth in the fourth quarter based on current exchange rates. So foreign currency expects foreign currency affects Facebook as well as any other company that does business globally. Actually, can't really blow up. Let's leave it here. To provide some context on the approach we are taking, setting our 2023 budget, we are making significant changes across the board to operate more efficiently. Right, so it's all about efficiency in companies today because things cost more money. You gotta manage well essentially. We are holding some teams flat in terms of headcount. We already read this, right? Shrinking others and investing headcount growth in only our highest priorities. As a result, we expect headcount at the end of 2023 to be in line with 2022. We talked about that. We have increased scrutiny. Oh, okay, so that means I got the magnifying glass out and time to cut costs. Time to tighten the belt, guys. We have increased scrutiny on all of our operating expenses. However, these moves follow a substantial investment cycle, so they will take time to play out in terms of our overall expense trajectory. Really? So basically what he's saying is we spent a whole bunch of money, lately, this substantial investment cycle, and it's going to take a while to figure out how to cut the fat. I think the idea is if you spend a bunch of money building something and it's not quite done built, not quite finished building, what do you do with the half-built stuff? So I think I'm sure that's what that means. Some steps like the ongoing rationalization of our office footprint, so that's how many people do they have coming to the office? And I think they already closed their office in New York. I remember reading that. Will lead to the incremental costs in near term. This should set us up well for future when we expect to return higher rates of revenue growth. Okay, well, they expect that, but who knows? Just being real, I don't know what the future is for sure. But they're going to try to cut costs by closing offices because people can work from home, essentially. We expect 2022 total expenses to be in the range of 85 to 87 billion. Updated from the prior outlook of 85 to 88 billion. So, and it's funny, guys, just remember, we're talking about billions here, right? Not millions, billions. I mean, millions a lot, but billions is big money. So they think their expenses could go up a little bit more. So you can see before they said it could be 85 to 87 billion in expenses. Now it's 85 to 88 billion in expenses. So their expenses might be up a little bit higher for the total year than what they had originally told people. This includes an estimated 900 million in additional charges related to consolidating our office facilities footprint that we expect to record in the fourth quarter of 2022. Consolidating our office facilities footprint. Okay, so what it must be is, my guess would be they're closing some offices and then they're gonna kind of either expand or just rebuild current offices. They say the word they say here is consolidate our office facilities, and they're spending 900 million to do that. It's a lot of money flying around. We anticipate our full year 2023 total expense in the range of 96 to 101 billion. So they expect their expenses to go up in 2023. Do you guys see this? So expenses in 2022, 85 to 88 billion, more than previously thought. And now they're saying their expenses are going to be 96 to 101 billion. And to give you guys some general point of view on this, their fourth quarter revenue is, they're saying, around 32. So you can do that times, we can just pull up a calculator here, because why not? Because it's more fun with calculators, because you guys can actually see what we're doing here. Where's our calculator? Hold on here. Gotta put the calculator button there. There we go. All right. So 32.5, we'll be generous, times 4. So maybe they're bringing in 130 million, and then they're have expense of, say, 130 billion, and they have expense of 100 billion. So if their revenue stays the same as it is fourth quarter of 2022 projections, they'll still be profitable. So I think they're still a profitable company if fourth quarter is the same. But the problem is their earnings went down 50% from last year, and they're still in the decline. So they might actually be in a situation where they could theoretically lose money. I don't think they would. I don't think so. But let's do this. Let's do, what if they came in at 30 billion a quarter next, and times 4, and then you had 120, so then you'd be up 20 billion. So you guys see what I'm saying here? Boy. This includes an estimated 2 billion in charges relating to consolidating. Okay, so they're saying rebuilding the offices and stuff like that, and refurbish into labs or whatever. It's going to cost them a lot of money. Boy. Okay. We expect the slight majority of 2023 expense dollar growth to be driven by operating expenses, with the remaining growth coming from cost of revenue. Okay. We expect so basically what they're saying here, their expenses are going to, like, just staying in business costs them money. And then cost of revenue is like, what they have to do to provide products to sell people. So basically just the cost of doing business, right? It costs them money. Like you got to spend money to make money, right? You got to maintain your servers. You got to hire people, office expense, these kind of things. We expect the percentage rate of 2023 operating expenses to decelerate meaningfully as we curtail non-headcount related expenses growth and keep 2023 headcount roughly flat in current levels. And I was thinking about this too, guys, is many companies, you got to be raising salaries for cost of living expenses. So it's hard to keep it down. And they're trying to make the case that there are expenses that are not related to salaries, right? That's a one-time expense kind of stuff. That's the kind of cases that they're making. Conversely, our growth in cost of revenue is expected to accelerate. Okay, so this is to, the revenue is how much money you're bringing in, and the cost to, produce whatever you're producing to bring that money in. They say that's going to go up, driven by infrastructure-related expenses, to a lesser extent, Reality Labs. Yeah, so Reality Lab hardware costs is costing them quite a bit, driven by launch of our next generation consumer Quest next year. Yeah, so see, guys, we were talking about here, revenues, money you bring in, and then cost revenue of, like, say, developing your Quest headset. It just takes money to run this Reality Lab thing. Meta is investing a lot in what they're trying to do. We can see the numbers, and their expenses are going up and their revenue's going down. It's not a great combo. Reality Labs expenses are included in our total expense guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year. Wait. Look at this language. Reality Labs expenses are included in our total expense guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year. Beyond 2023, we expect to pace Reality Labs investments such that we can achieve our goal of overall company operating income in the long run. Yeah, I get it. They're saying we invest now, we're going to make money in the future. I mean, yep, that's the goal of every company, of course. They might be able to do it. Who knows? I remain bearish because I just think it's too expensive, what they're doing. But, it is what it is. We expect 2022 capital expenditures, including principal payments on finance leases, to be in the range of 32 to 33 billion, updated from our prior range of 30 to 34. And it's about. But the thing is, it's funny. You can't dismiss these numbers because it's like, they're saying they're tightening in the focus, so they're trying to cut down here. So it's 32 to 33 billion is what they expect for 2022 capex, and then that was before. So they're trying to cut down. Before, they thought it could be as high as 34 billion. For 23, we expect capital expenditures to be in the range of 34 to 39. They're going up. What? Oh, guys, you're killing us. What's a few billion here or there? So first I was like complimenting them, and now it looks like they're going to be like increasing their capital expenditures by $5 billion roughly next in 2023. Yeah, next year. Driven by our investment in data centers, servers, and network infrastructure. An increase in AI capacity is driving substantially all of our capital expenditure and growth of 2023. Absent any changes in U.S. tax law, who knows what taxes are going to do, we expect our fourth quarter 2022 and our full year 2023 tax rate to be similar to the third. Okay. In addition, we are previously noted we continue to monitor developments regarding the viability of transatlantic data transfers and the potential impact on European operations. So, guys, doesn't sound good. There's not really much you can say. I mean, I can look at a couple of these random numbers here, They're family active people, so people are still using their platform. It's up 4%, up from 4%. Daily active users increased 3%. So they're not losing their users. It's just their revenues, are going down. They're spending more money, and they're trying to invest in the company, which is not crazy, but net income 52% down, diluted earnings 49% down. I mean, just income from operations 46% down. Just things are down. And that's it. And then Zuckerberg saying, this is from them, our community continues to grow, and I'm pleased with the strong engagement we're seeing driven by progress on our discovery engine and product like Reels. While we face near-term challenges on revenue, the fundamentals are there for a return for stronger revenue growth. we're approaching 2023. We're focused on prioritization and efficiency that will help us navigate the current environment and emerge an even stronger company. Maybe, but they're you guys. So this is my thoughts. I mean, they're going back to kind of startup days and reinventing the company and making heavy investments. And so the bet on Facebook, if you're into this, is a bet on Zuckerberg that this metaverse thing is going to work out. Just do be aware that we are in a recessionary period essentially, and the question is they're heavily investing in this whole new metaverse world. And my fundamental problem with this is that during this time, are people going to be wanting to buy the goggles to be part of this world? All right, when will that actually turn a profit for them? And I really question that. Also, too, sentiment on Facebook is down a bit. To be fair, just looking out ahead, let's say we hit 2024 and we got the presidential election come out, and maybe political parties decide to spend a ton of money on political ads. Maybe that'll be good for social media in terms of bottom line. I'm not talking about our our relationship with the other Americans, but I'm trying to paint some positives here. But the other thing too that theoretically they could fire enough employees to cut costs, which I mean obviously that's a tough thing to do. And then the other thing is maybe we get a lot of people working from home and try to cut costs in terms of office space. It's hard to cut costs and reinvent your company and grow, right? It takes money to grow. So they're trying to do a couple different things at the same time, cutting and growing and reinventing, actually 3 things at the same time. So that's my thoughts on Meta. We read through the stuff. We looked at the numbers. It's hard, for me, it's hard to stay bullish. But to be fair, Zuckerberg's a smart guy. However, think of it this way: is when you first start out and you're brilliant your first time around, people sort of trust you after that. And the idea is, can you catch lightning in a bottle more than once? And I'll give you an example. I always use the same example because it's a good one. Is think about J.K. Rowling. She wrote Harry Potter, right? And she did this great interview with Oprah Winfrey, and she said basically, I've accepted that Harry Potter is going to be the best story that I've ever going to write in my life, and that's okay. I don't need to try to go out and catch lightning in a bottle again because I'll just be chasing the dream. And she said, and she compared us to, and talked to Oprah about this, about how Michael Jackson, after his Thriller album, and then you could say Fall Out Bad, but Thriller was just like fantastic success musically, financially, everything top of the world. And then Michael Jackson had a lot of mental problems because he just could never get back to that point. And this is something that Oprah and JK were talking about. And then this is sort of, you could make the argument that, Zuckerberg's trying to recapture the magic and excitement of being young again and going on TV for the first time and, doing Facebook, and everyone's like, oh my God, you're a genius and stuff like that. And so sometimes, and I'm thinking about just business as a whole, and you could talk about Amazon, it would be a similar thing, but sometimes, time to hang up the hat, literally sell out, take your money, and live the rest of your life in peace. But to be fair, he's ambitious and trying something new. It's his money, and do what you like. But also, too, to be fair, it's also investors' money, right? So investors obviously want to get a return on their money, and Zuckerberg really, is betting the farm on something new. So, I'm not in this at all or anything like that. I remember when they announced and were pushing Metaverse last year, and I remember it was strange. Even on CNBC, they were saying, "Hey, look at this! We got our avatars in the Metaverse," and it just seemed like everyone was pushing it, and it was kind of a bit of a scam, in my opinion. I mean, and it was like we're all told that Nvidia is going to make a bunch of money in the Metaverse, and everything's skyrocketing up, and that was kind of the pinnacle or the peak of the bubble. And I remember this was the same period as when Rivian was crazy high, and I told everyone, guys, this just feels like total top of the bubble, and I was right on that. And so it's interesting because the whole Facebook thing ended up being part of that crazy bubble. And I will just say this: if Mark Zuckerberg comes out and starts talking about crypto and NFTs, I bet I'd be getting out for sure. So if I were in this, so that's my thoughts on it. I'd love to hear your thoughts on this. Do you think Zuckerberg can be successful? And I'll catch you in the next video.